If you have been less than enchanted with the high home prices in the United States, you might want to set your sights far, far away, as in a whole other country kind of far away. Today, we are looking at investing in foreign markets, and we will cover why many investors are choosing to look at these options, what you should consider before you invest, and most importantly, the 4 common mistakes you want to avoid as you explore these far, far away lands. Hi friends, welcome back to my Wealth Builders Realty. I am a realtor and investor in the Boise, Idaho area. With over 20 years in this industry, I have been both delighted and dismayed at the increase of real estate prices as of late. On the one hand, despite the losses we personally suffered in the 2008 recession, our investments have not only fully recovered, but have almost tripled in value, giving credence to the fact that real estate is a long-term play that brings wealth when managed correctly. Of course, with the recent increase in interest rates and no relief in sight for high prices, investing in real estate in many areas of our United States has become increasingly less profitable, if not downright impossible. If you are feeling a little more adventurous, then listen up, as today we will cover what investing in foreign markets might have to offer. So let's get to it. First, why would anybody even choose to look at another country for investment opportunities? Well, as we intimated earlier, with the median home price across the United States sitting at a pretty $420,400 and with interest rates hovering at 7%, finding something that will actually cash flow at current market rents is almost impossible. Sure, you can put more money down, look into short-term rental options, or even exhaust your resources in looking for that rare value-add property to do a BRRRR. But the bottom line is that even affording the medium-priced investment can be a challenge. So if you're priced out or can't make money in your local areas, you might be happy to see that many countries have a lower bar of entry and in many cases, an attractive return on that investment when strategically located. Add to that a potential favorable exchange rate, and you just might have a gold mine. Another advantage to looking for an investment overseas is to further diversify your portfolio. Just like there can be great variations in markets from state to state, different countries implement foreign investment regulations that can be very favorable to investors. In fact, many countries are very happy to work with foreign investors and offer many perks to those injecting money into their economy. Then there are investors who are simply looking for a cheaper way to vacation. Instead of investing in a timeshare or paying those stiff resort fees every time they travel to a favorite destination, they look at condos that they can vacation at and Airbnb the rest of the time. Depending on where you buy and when you use it, that investment strategy could be a nice one. While still others have retirement goals in mind. They may choose to invest in a home where they plan to retire later, taking advantage of buying at today's price and recouping their investment by renting it out or simply paying it down with US dollars. I would argue that paying off that medium-priced home in Mexico of $158,000 is a lot easier than paying off the medium-priced home in the US today. Of course, there are other reasons to explore your options. However, regardless of your intended purpose, there are 3 things to consider before jumping in. First and foremost, you have to know if you can actually own property or land in that country. And if you can, are there any restrictions to you as a foreigner? How is taking title handled, and does investing come with any perks, like residency or even maybe citizenship? Mexico, our southern neighbor, has restrictions on not only how foreigners can take title to certain property, but also on what they can invest in. For example, purchasing anything on the coast or along the border will require setting up a land trust at a Mexican bank called the fideicomiso. This land trust provides you with a 50-year lease, which is renewable, but comes with yearly fees. The property is essentially titled in the name of the Mexican bank, and you are named as the beneficiary. You should be asking yourself, are you comfortable with that arrangement? And how will those bank fees affect your return on investment? Now, if you see yourself as the owner for a 100-acre hacienda with orchards of produce, you might want to look out for ejido land. Ejidos consist of farmland owned communally by the villagers in many areas of Mexico, and I imagine that many countries have similar arrangements in place to protect valuable farmland. Ejido land in Mexico cannot be purchased directly by foreigners. There is a long and arduous, expensive process to privatize the land before you could purchase it as an American. Other countries have their own restrictions. For example, foreigners can't own land at all in the Philippines. In Cyprus, there are limitations on how many properties a foreigner can own. And in New Zealand, foreign buyers typically can't purchase existing homes or residential land, but they can invest in new developments or commercial properties. On the flip side, some countries offer some pretty nice incentives to foreign money. For example, Spain will give you a residence visa for 2 years if you buy an investment of 500,000 euros or more. Portugal, Greece, and Italy also have their own residence visa programs in exchange for investing in their country. However, beware, residency isn't always a guarantee. New Zealand and Austria actually require that you apply for a visa despite any investment you make. So make sure to find out if you plan to vacation there or eventually retire at any destination where you want to invest. Moving on to taxes. Unfortunately, the United States of America is one of the few countries that will tax any and all income you make overseas. And while there are many rules and regulations that will be specific to your situation, just know that this will mean hiring tax professionals who can help guide you through the process of navigating that tax liability. And of course, this does not mean you will avoid getting taxed in that country as well. Some countries offer very investor-friendly terms, while others don't. As with any investment, make sure you are aware of what the government will take both overseas and in the US. More on taxes later. For now, let's move on to financing, or rather the lack thereof. Even though the potential for a lower purchase price is quite high, many countries do not offer the generous financing options that the US of A does. Getting a mortgage as a foreigner in many countries can be difficult, if not impossible. 30-year fixed-rate mortgages are not available in every country or might have other restrictions. For example, Spain will allow for a 30-year term if you will have that note paid by the time you're 70 or stop working. Portugal gives you up until you're 75. Still, other countries might allow for a 25 to 30-year mortgage, but the interest rate readjusts to market rates every 5 years. In light of our recent interest rate, imagine having a 3% in 2020 and looking forward to 7% in 2025. Needless to say, your money goes further with financing, that's for sure. But don't count on financing always being available to you as a foreigner the same manner it is in the US. Let's shift gears here and cover 4 common pitfalls you definitely want to avoid. First, you need to be aware that foreign markets are no different in that fraudulent behavior exists there too. If it looks too good to be true, it probably is. And yet many foreigners are enamored by the new construction, beautiful beaches, and way cheaper price tag that they soon fall victim to scams. One of the most common happens when you don't know what local negotiation customs look like. In many parts of the world, you can barter for just about anything you are trying to buy, including real estate. And when that type of barter is expected, prices tend to start way up high. So even though $100,000 for that 2-bedroom, 2-bath beachfront condo sounds amazing, remember to don your investor thinking hat. How would you feel if you knew after the fact that you could have paid only $60,000 for it? Of course, you also want to avoid falling for fake listings. No matter how many times you have visited a country, state, or even city, please make sure you actually go out to the property that's for sale. In addition, get a reputable agent and title company involved. The agent will know the ins and outs of what's for sale, pricing, and negotiation norms. A good title company will ensure who is actually the owner and that there are no clouds on the title like unpaid taxes or other existing liens. Plus, as we mentioned earlier, they can save you the heartache of trying to buy ejido land directly from a weary farmer who shouldn't be selling to you. If you are buying a property that is already being used as a rental, either long-term or as an Airbnb, please make sure you understand the real income that is being generated. Padded profits is one thing, but what about off-season discrepancies? It's easy to examine the income generated in the high season and be wowed. But what happens when all the tourists go home? Even more important, if you plan to use this property yourself, when would that be? Many snowbirds buy in Latin America and plan on using their investment property during the winter months. Unfortunately, that is when everyone else wants to rent it too. Being crystal clear on your investment goal becomes very important. Is the primary goal to make money or have it available for personal use? If you want to have your cake and eat it too, you need to know in what country doing so won't kill your potential return. Of course, if you plan to make money, then you also need to understand the local laws and ordinances that are coming down the pike. You only need to look around at popular tourist destinations to see the cries of the locals who are being priced out by short-term rentals and foreigners buying up properties. Spain made major news recently when they announced that every hotel, travel agency, and private landlord will now collect private information from their guests, which must be reported to the Ministry of the Interior. Plus, there will be added tourism fees and taxes to each booking, which will certainly impact where people want to travel to. And Barcelona will completely ban Airbnbs by 2029 in an effort to help with the local housing crisis. I would not be surprised in the least if other countries followed suit. If these types of regulations come to a town near you, how will your Airbnb fare? Are you able to pivot to a long-term rental, or will that force you to sell? This, of course, leads me to the final mistake that you should look out for. Unfortunately, it's one of the biggest mistakes I see investors make when moving forward on a foreign purchase. They get so excited with the looking and buying and income potential that they never give their exit strategy a thought. The fact of the matter is that just like anything, investments can stop being profitable. Markets change, tourism regulations get passed, natural disasters destroy properties. Hello, hurricanes and wildfires. Or maybe your life changes. What happens when you lose your job? Or maybe you find a better vacation spot. Or your health changes your plans for an overseas retirement. Whatever the reason is, you need to know what happens when you need your money back. First, understand that real estate isn't liquid anywhere, but many foreign markets are even less so. In the United States, we are slowly working towards a balanced market, which means selling on average in 4 to 6 months. But many foreign markets can take over a year before anything moves. Can you wait a year or more to get your money back? Then we need to circle back to taxes. As we touched on earlier, the United States has strict policies on foreign income. Not only is your rental income subject to taxes on a yearly basis, but unless you sell your foreign investment and replace it with another foreign property in a 1031, you will also be subject to capital gains taxes in the U.S. when you exit that property. Unfortunately, bringing that gain back to the U.S. tax deferred in a 1031 is not an option. Now, what about your host country? Will they tax your capital gains too? Well, if you invest in Denmark, you will be subject to a 42% capital gains tax on any profits made, one of the highest in the world. Other countries have their own rates. Norway and France follow right behind at 37.5 and 34% respectively. On the flip side, Belgium, the Czech Republic, Switzerland, and Turkey have no capital gains tax. Either way, taxes when you sell will dig into your return. Current long-term rates in the US are capped at 20%, while short-term rates are taxed at ordinary rates. However, as we just saw recently, proposals for changes abound from administration to administration. Make sure you know what those taxes currently are and what they can potentially be. Another thing to keep in mind is currency fluctuations. If you travel at all, you know the dollar goes up and the dollar goes down. The same is true for other currencies. If you plan to use a local currency, make sure the currency is stable and that the country is politically stable too. In many countries where inflation is rampant, it's tempting to use this to your advantage when you buy with a strong dollar. But what happens when that dollar is low when it comes time to sell? Further, you might want to be aware of countries where foreigners are required to buy in US dollars regardless of the currency exchange rates. In Mexico, new construction is often quoted and sold in US dollars. Builders will do this to avoid volatility as they construct their projects. And many savvy sellers move in that direction when dealing with foreign investors as well. What is common in the country you are looking at, and does it change if you buy existing or new construction? Friends, opening your eyes to overseas investment is a beautiful thing. And just like any investment you make, there will be risks to maximize your return. This list is by no means all-encompassing in telling you what you can expect when you buy in a foreign land. Every country and even region will have their own laws, restrictions, and challenges. Do your research, but keep an open mind. It's a great big world out there.